Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance, and sometimes we uncover a few interesting financial secrets along the way. Today we are diving into a filing from Senmiao Technology Limited, and let me tell you, it's got some interesting moves happening. Alright, so if you are not familiar with these filings, an 8K is basically a report that companies have to file when something significant happens, something that the shareholders should know about right away. Think of it as a company hitting the news section in corporate speak. This particular report was filed on the 14th of November, and it covers events that happened on that same day. So it's pretty fresh. We are looking at Senmiao Technology Limited. They are incorporated in Nevada, which is pretty common for many companies, and their stock trades on the Nasdaq under the ticker symbol AICH. Their main trading security is their common stock, which has a very small face value, just a tiny fraction of a cent per share. Now, the big news in this filing is under item 1.01, which talks about entering into a material definitive agreement. Basically, the company has signed a really important deal. On the 14th of November, Senmiao Technology Limited, which we'll just call the company from now on, signed an agreement to sell its securities to what are called accredited investors. These are typically individuals or groups that meet certain income or net worth requirements, so they are considered sophisticated enough to invest in certain types of offerings. Here is what they did. They agreed to issue a little over 1.3 million shares of their common stock. On top of that, they are also issuing these things called pre-funded warrants. Think of warrants as options to buy stock later. These pre-funded warrants are a bit special because they essentially let investors buy the stock at a very low price right away, almost like buying the stock itself. But it's structured as a warrant. They are selling these at $1.26 per share. The total amount of money they expect to raise from this offering before any fees or expenses, which is what we call gross proceeds, is about $2.8 million. This deal is expected to officially wrap up around the 17th of November, assuming everything goes smoothly with the usual closing conditions. And what are they going to do with this $2.8 million? The company says it is for general corporate purposes and working capital. That's a pretty standard answer, meaning they'll use it to cover their day-to-day operations, pay bills, and fund ongoing business activities. These shares are being offered under something called a shelf registration statement. This is a way for companies to register a big amount of securities with the CSE ahead of time, which makes it easier to sell them quickly when they need to raise money. Like in this case, this shelf registration was already approved by the SEC back in September of 2023. But that is not all. In addition to the direct offering, they are also doing a separate private placement. This means they are giving these investors warrants to buy even more shares, up to 4.5 million shares of their common stock. Now, to raise a catch for these additional warrants, they can only be issued if the company's stockholders approve it. If they get that approval, these warrants will be valid for 5.5 years and can be exercised immediately at that same $1.26 per share price. To get this shareholder approval, the company plans to hold a special meeting of its shareholders within 45 days after the initial stock sale closes. These warrants and the shares they can buy are being offered under an exemption from the usual registration rules. This is common in private placements because they are dealing with sophisticated investors who are assumed to be able to assess the risks themselves. If the shareholders approve, the company will then file another registration statement, this time on a different form called S-1, specifically to allow the buyers of these warrants to eventually sell the underlying shares if they choose to. This filing will happen within 30 days after that special shareholder meeting. Again, if approval is granted. So, all of this is a summary. The actual agreements are filed as exhibits with this report, and you can look those up if you want all the nitty-gritty details. Now, let's quickly scan the exhibits to see what supporting documents are attached. We have the form of the warrants themselves, and the form of the pre-funded warrants. There is also a legal opinion from a law firm supporting the issuance. And here is the actual securities purchase agreement that we've been talking about. And finally, the interactive data file for overing the cover page details. And here is the signature page signed by the Chief Financial Officer, Xiaoyuan Zhang, on the 14th of November, 2025. So, what does all this mean for Senmiao Technology Limited? The company is raising about $2.8 million through this offering. This is a relatively small amount for a publicly traded company, but it can be significant for a company of their size. The fact that they are selling shares and warrants suggests they need capital to fund their operations or growth initiatives. The dual offering, one registered and one private placement, is a common tactic to raise funds efficiently. The need for shareholder approval for the additional warrants indicates that issuing a large number of shares could significantly dilute existing shareholders. This means that each existing share would represent a smaller percentage of the total company ownership. Dilution can be a concern for investors as it can reduce the earnings. per share and the value of their existing holdings. The exercise price of $1.26 per share is key here. If the stock price goes up significantly above this, the warrants become more valuable and the company could raise more money when they are exercised. However, if the stock price stays below $1.26, these warrants might not be exercised and the company won't see any additional cash from them. Looking at the broader picture, this filing tells us that Senmiao Technology Limited is actively managing its capital structure. They are using both registered offerings and private placements to secure funds. The reliance on accredited investors and exemptions from full registration suggests a strategy to move faster in raising capital, possibly indicating an urgent need or a desire for flexibility. The upcoming shareholder meeting is a crucial event to watch. If shareholders vote against the issuance of the extra warrants, it could signal investor concerns about dilution or the company's strategy. On the flip side, approval would mean investors are comfortable with management's plans. The company's stated use of proceeds for general corporate purposes and working capital is standard. But it doesn't give us much insight into any specific growth plans. Without more detail in this filing, it is hard to say if this capital infusion will lead to significant expansion or just help the company stay afloat. We would typically look for more financial data, perhaps in a quarterly or annual report, to understand the company's financial health and growth trajectory. However, for an 8K filed for a material agreement, the focus is more on the transaction itself. In conclusion, Senmiao Technology Limited is raising capital through a combination of common stock and warrants, tapping into the accredited investor market. The success of the warrant issuance hinges on shareholder approval and future stock performance. It is a move to bring in necessary funds, but its true impact will depend on how this capital is deployed and whether it leads to sustainable growth. Alright, that's our breakdown of Senmiao Technology Limited's latest filing. What is your take on these fundraising moves and what they signal for the company's future? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings, and don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.